Eric Mother at Mother.com with the US market analysis for the weekend of August 27th and August 28th, 2016. Markets off their lows with about, let's call it about 2 hours to go before the close. A little bit of an unchanged day. Volatility, a little bit spiked on Friday, coming off the lows, and yet we are way off the highs of the day. So a little bit of a confusing session. Let's take a look at those charts. We begin by taking a look at the Nasdaq. As of right now, we are coming back to challenge this breakout level on the weekly for the Nasdaq. If you go and consider the weekly closing high for 2015, so the level we've been watching here is for the Nasdaq to successfully hold above 5214. Otherwise, right now it's back below that level, and failure to hold above that breakout level suggests that now we are running out of momentum, out of energy, and maybe we might have a pullback setup here. So below this threshold number here, the markets don't look very healthy. So let's see which way we close for the week. Otherwise, staying above that price might suggest that the breakout is still healthy. Of course, the key for the Nasdaq is this breakout here on its monthly chart. And as long as the market is breaking out above that number there, or about that previous 2015 monthly closing high, as long as the market is holding above that, we have to assume that the market continues to be bullish and that the market is healthy. That level we are watching here on the monthly for the Nasdaq is 5128.28. So as long as the markets are above this number, this breakout continues to be intact. The markets still have a bullish bias. And right now we are above that number. We have to assume that on the monthly, the Nasdaq has yet to turn down, and this is good enough to keep the bulls expecting higher level. Of course, we know that at some point, if the market does drop below that number of 5128.28, a monthly failed breakout here might not be good. So we have to also understand that moving below that number, if we do at some point, would be bearish. Right now we're above that number. We have to assume that the bulls are still in charge in terms of month-to-month act. If we take a look at the Dow on the weekly chart, right now the Dow is failing on its weekly breakout. That's not a good sign short term. And the level we're watching here is for the Dow to break out above the recent weekly closing high. And that level that we've been watching was for the Dow to stay above 18,570.85. Right now we are back below that number, so this is a failed weekly breakout. Week to week, this is a sell signal for the Dow. Now if we go to the current pullback in the market on a day-to-day basis, again, keep in mind I'm recording this video with about 2 hours to go before the close. And here we are seeing the market trading at the lows of the day. One of the reasons is something I talked to subscribers yesterday. It is this RSI action where the Dow is moving below 50 on its daily RSI. Whenever you have that swing and slash below RSI 50, you tend to have a huge reaction lower, which is relatively what we are getting here. And it's not a very big drop. It's only about 0.5% for now. But generally, whenever you get this drop, you get a relatively huge size move relative to the recent action. So it makes sense that the market is pulling back here. We'll see how we close. Generally speaking, when you move below 50, you tend to close at the lows of the day. Now it's good to go back and take a look at what happened at the highs recently here. And we had been discussing this improving high setup with the RSI failing to do so. And that we had been discussing was going to set up for a pullback because of that negative divergence where prices made new highs, but the RSI was not following through, and we can see the pullback now taking place. Now we have to be careful to call the market dead because of one-day action. Reason being that if you take a look at this movement off the low, so this RSI movement, which corresponds with this price RSI action, corresponding with this price coming off the lows here, we can see that the market has been trading higher since then. Obviously, we draw a line from here based on our support method, which I call the uniformity method, and you can see it's been successful. Every time we touch that green line, the market bounces. The last time we came here, we had uniform activity below the green line, back above it for this re-entry, and now guess what? We are coming back to test this green line. So we cannot call the market dead until we get more information of either support on this green line or failure. Now if you take a look at the Dow hourly chart, we can see that the pullback does make sense because we were showing resistance here while prices were making improvement in highs here. You can see the RSI was showing resistance, and so we were expecting, as long as the market was finding resistance on this top side on the hourly RSI, that eventually we get a pullback, which is exactly what is happening here on Friday. Having said that, if you take a look at the opposite argument, which is that the market is coming back to test this RSI support line. So if we stay below this line of support, then maybe we see a bigger drop. Otherwise, if the market can find itself back above that green line of support, then maybe this move here is just a little bit of a pullback before the market recovers. We can also see this on the Dow 30-minute chart, which is coming back to either test, support, or break. And it's a simple line connecting recent lows on the RSI. So right now we are back in this general area as we come to the conclusion of Friday's session. Either the market finds support here for a recovery off the lows, or we break down below that line of support and now we have a true drop here. So it depends on whether the market finds support or not. It's too early to call which way the market might be deciding to do, but for now you can see that the market is coming back to test this line here. If it holds, good. If it breaks, then we see a deeper break or a deeper move lower as we come to the close of the session. Now keep in mind, because the daily chart is moving below RSI 50, it might be that the market still ends up closing at the lows of the day. The biggest risk for the market is the Dow turning red for the month, which is what is happening right now. Keep in mind, we've been saying that as long as the market here is negative for the month, that's bearish. So right now we look at the Dow, and right now it is down for the month here, which is bearish. The reason why I say that it's not a good setup is because on a month-to-month basis with a down market, we are looking at what essentially is improving monthly highs with declining technicals, and this is not a good setup. Of course, we saw that negative divergence on the hourlies and on the daily be the reason why the market is pulling back. So you can imagine, if this negative divergence is taking place on the monthly, it suggests that month to month, as long as markets are showing this line of resistance here, it suggests that month to month the equation is flipping, and that now we are looking at a market that is now wanting to go down month to month. Now keep in mind, if you take a look at the long-term picture for the Dow going back to 1990, you can see that the risk of resistance on the hourly, on the monthly chart, is this line here. Now keep in mind, the Dow is finding it difficult to move above 61.8 on the monthly RSI. That's a negative, and a big one at that. Reason being that if you take a look at the major drops over the last couple of years as far as the Dow is concerned, and I guess the general market, we cracked here in 2000 below 61.8 off the highs there for this major drop. Take a look at this subsequent break here. Again, it happens to be below 61.8 for the drop of late 2007, 2008, early 2009, and we are coming back here. Generally, as long as this is resistance, that's not good. In fact, if you go and take a look at a closer view, the problem here is you're making higher highs in price, but the RSI is failing to move above 61.8. That tends to be the worst type of negative divergence, suggesting this is a huge sell signal as long as the market is down for the month. Of course, market bulls would like eventually for what to happen is for the market to move above this line of resistance and also to break out on a month-to-month basis. So right now we are looking at a market that is down. As far as the Dow is concerned, the risk is now changing to a market that wants to go down. S&P 500 daily also was making an improvement in price highs, but the RSI was showing resistance here and also on this line here. So those two lines, as we've been discussing, we're always going to create a problem. We are seeing a relative to the recent sideways action here, in terms of relative sideways action that has been almost the market moving in a narrow range. We are seeing a little bit of an expansion in volatility as the RSI moves below 50. Again, generally that is what happens when the RSI is moving above or below 50. You get an expansion in volatility. So here we are seeing the possibility of markets closing potentially at the lows of the day. We shall see. By the time you're watching this video, market would have closed. And if you take a look also here, just like the Dow, we're pretty much coming back to test a level that could be support. And it is just off this recent lows. For example, this is where the price recovered. So there was an entry in price here. And since then, we can use this line here for support. And you can see we bounced on the line previously here for the lows there. We bounced on the line here for the lows there, and we are coming to test that level. So hour to hour, the market has yet to break. So that's one potential layer of support on the hourly. Either we hold that line, so either we hold this line or we drop. And also we are coming back to test the recent lows line. So either these two lines are going to hold and the market bounces, or for the first time in many weeks, the market starts giving us short-term sell signals by cracking below those two lines. This is also evident on the 30-minute chart for the S&P 500. As you can see here, SPX coming back to test this line of support. So either we hold short-term or we break and we get a deeper correction, or at least a deeper move lower. Keep in mind, like the Dow, the problem here is for now the S&P 500 is down for the month, and that creates a situation where we've seen an improvement in price highs month to month, but the RSI is failing. And this RSI failure so happens to be the RSI coming here, seems to be stalling at about 61.8. That tends to be the worst type of negative divergence. So the problem here is turning negative for the month might set the stage for a major pullback. And also the key is what happens if the market comes back to test this breakout on the S&P 500. And of course that level was the breakout above 2107.39. So right now we are seeing, as long as the market is down for the month, not a good setup. One can start looking for reasons to be bearish or for finding short opportunities. But the key is whether the market eventually finds support if it comes back to test this breakout level. A movement below 2107.39 would be very bearish. So the setup here month to month is starting to change. Yet we can see that the hourly charts and the daily charts do want to give the market a reason to bounce. If the hourly charts we discussed here and the 30-minute charts, if the charts on the hourly charts and the 30-minute charts fail, if we see a failure on the support line for the hourly and the 30-minute chart, then that's going to be suggestive that now, with the markets down for the month, the equation has changed and your markets are starting to turn bearish. Of course, we'll see how things go. Keep in mind, things are always developing, but for now, down months, not good. Eric Muadh, Muadh.com. Peace and blessings. Subscribers, be on the lookout for part 2 of this weekend's market analysis video.